Hi, I want to welcome you all to the world's best part-time job webinar. This webinar is going to be for the beginner investor. So with that being said, anyone who's here, if you're intermediate to advanced, this particular webinar is not going to be for you. I highly suggest you check out some of my other material where we cover more advanced investing strategies and topics. This webinar particularly is for the beginner investors. It is going to follow the book, The World's Best Part-Time Job. I'm going to be expanding on a few of the topics discussed in the book. However, I'm not going to be dialing in too much as I don't want this video to take up too much of your time. It's basically just to be, it is intended to be supportive to the actual book. If you don't have the book yet, if you need a physical copy, it is available on Amazon right now. You can just type in my first and last name, Princeton Mayberry. It will pop up. However, if you're more into the digital realm, I do have it available as an ebook and also with a bundle, so you get a few other great items along with the ebook if you decide to get the ebook instead. That ebook can be purchased at www.beginnerinvestinguniversity.com, as well as all other training programs that we're going to have. So let's get back to this particular webinar, guys. Again, the world's best part-time job. For anyone who doesn't understand or know what that means or what I'm referring to, I am referring to the stock market. That is the world's best part-time job. And for some who went a little step further, like I said, advanced and more professionals, it's actually their full-time job. And believe me, guys, there is some money to be made in the market if you know what you're doing. However, at the same time, you can use the market just to supplement your income. You can use it to build wealth. You can use it to do a whole lot of different things. It just depends on what your goal and your whole purpose of investing is about. So that's what we're going to be covering on today's webinar. Be sure, if you haven't already, follow me on all the social channels, Beginner Investing University, so you can stay up to date. Let's go ahead and get started. So before we dive into all the financial jargon we're going to cover today in today's webinar, I thought it was important that I tell you guys a little bit about my backstory and why I'm here today and how am I qualified to talk about these topics. So first of all, let me just let you guys know, I am not a financial advisor. I am not a stockbroker. Any information I cover here or anywhere on the website is just for informational purposes only. Please always do your own research before making any type of investments. No matter if you get it from me or anyone, always do your own research. I definitely want to get that out of the way for you guys. So as far as my story goes, born and raised South Side of Fresno, California, not one of the best neighborhoods. We all, some of you may can relate there, surrounded by a lot of, drugs, violence, and not so good things. I was able to, complete my schooling, played a little bit of football early on, got into a little bit trouble, unfortunately, and football was no longer my way to go. Fast forward a little bit into time, around college, started did a little bit of music. That was, my story for about a good 5 to 10 years. Got into the stock market. I would say it's back maybe about 2011. Got into there briefly, but unfortunately, life events happened. I had to basically stop what I was doing there, get a a regular job like everyone else, and start earning a living. Uh, Fast forward a little bit more time, where we get into the more of the financial background. I was studying to be a stock broker with one firm, and also at the same time, I was actually studying to be a financial advisor at one of the top brokerage firms in the country. I was actually going to get my Series 65 and Series 7 license. Again, how life likes to do. Uh, Something came up, life changing event came up, which made me have to pivot and unfortunately not able to go finish and complete my route in my financial journey. Um, Still something I'm probably planning on doing later down the road, just with the timing right now. COVID, all these different things happening right now. It's not the best time for me to pursue that right now. So instead of me just keeping all that knowledge inside and wasting all that time, money, and hours I spent studying, buying all this material, I decided to, hey, why not put it into a book for everyone to enjoy? And that's how basically how the world's part-time job was created. It's basically all the years that I spent, all the money I spent buying financial books, training programs, webinars, you name it, I did it. Um, Covering all various topics of the stock market and including, like I said, investing, which is why we're here today. So thought it was important I just, give you guys a little quick insight on me. So the purpose of this book is to teach people the basics of investing. Again, this is not going to cover anything advanced. It's not going to be anything intermediate. It's going to be very basic. All this information you should be able to find it online if you do some searching. But that's the benefit of this webinar. You don't have to waste your time going and searching. I got everything in here, put it together real tight in a nice package here. And again, of course, in the book, World Best Part-Time Job. So what am I out to cause with this? Basically, I just want to empower everyday people to invest. I got a glimpse of it back in 2011. I wish I could have stuck with it. Who knows where I'd be today? And I just, let you guys know, like, hey, you don't have to be a math whiz to invest in the stock market. You do not have to have a financial degree to invest and be successful in the stock market. So that's pretty much what we're going to be covering in this book. Again, guys, this is not intended to provide you with any type of advice. It's just informational purposes only. Please always do your own research, and if not, definitely get you a licensed financial advisor. Last thing I want to let you guys know, this is not an end-all book. What I mean by that is don't stop your education here. Please move forward. As like I said, I'm not going to be able to touch on every topic or we'll be here for 3 weeks. I want to give you guys just the basic information you need so you can get started because I believe you don't need to know everything about the stock market to start investing. So moving right along, why is investing in the stock market important? Well, there's numerous reasons why, but I'm just going to focus on a few here, which is at the top of the list is to build wealth. If you understand how the stock market work, excuse me, that is where you can actually multiply your money. That's where you can earn that passive income. I know a lot of you guys hear about in a lot of books, a lot of big dogs, a lot of wealthy people always talk about this passive income, earning passive income. You want passive income. Stock market is one of those markets, or I should say, platform where you can actually earn that passive income. You can use it to reach your monetary goals. So if you have goals, if you're saving up, I don't know, maybe you have a kid and you're saving up for their college education, you can definitely use the stock market for that as well. Again, get your money to work for you. If you don't know what that means, basically your money having little money babies. And then those money babies have more money babies, so on and so forth. And there's your passive income. Last thing, you can hedge against inflation. Currently, right now, at the time of this recording, we are still going through the pandemic, the COVID-19 pandemic. A few stimulus checks have been released. Recently, I believe it was $1,400 to each individual and each dependent. So if you guys don't know the impact that's going to have on your money or the U.S. dollar moving forward, it's definitely shows signs of some inflation, which means basically just means the buying power of our dollar is going to decrease. So it's going to take more dollars to buy the same thing that took less, maybe last year or a year before that. Perfect example I use with people is a bag of chips. I remember when I was growing up, you can get a bag of chips for 99 cents. Eventually, it went to $1.10. Now it's $1.25. After this, I'm assuming, don't quote me on this, but we're probably going to be about a buck 50, buck 75 for a bag of potato chips. So yeah, so why is investing in the stock market important? That's why, and that's actually a very important, or very probably number two on the list after building wealth will be hedging against inflation. Because if you keep cash, you're losing money. You're losing money. You're losing money. So what is investing? We hear this word all the time. What is investing? Well, the definition of investing is act of committing money or capital to an endeavor with the expectation of obtaining additional income or profit. So what that means is you're going to take some of your money, you're going to put it at risk, and you're only going to do that because you're going to be expecting to get some income back or some profit for putting your money at risk. Basically, again, it's money earning money, and a short term of what I say investing is kind of like trading. It's like very very short term investing. I mean, you can be in and out of these trades in seconds. This is probably when you see all those people who have 15 monitors on their computer desk and they watching that price by the second. I mean, that's not what we're going to cover here. What we're going to be doing is more passive. Again, it's going to be more of a part-time job, not a full-time job. But I mean, that's the basic of investing. It really is that simple. It's the act of committing money or capital to an endeavor with the expectation of obtaining additional income or profit. I'm going to put something out there and I expect to get something back. It really is that simple. Please don't overcomplicate it. Y'all stick with me. Here we're going to review a stock just to show you guys some of the basic things you probably want to look at when you're looking at a stock. I use Yahoo Finance. They have a lot of free tools for you guys. Definitely check them out. Just hit the play button on the video. Watch the video. When you're done, we can move forward. You can find this video and more on the YouTube channel. Definitely, again, follow me on all the social channels, Beginner Investing University. So the next topic you guys should be aware about when investing is risk. What is risk? What is your risk tolerance? How much money are you willing to put at risk for a return? How soon do you need the return? So whenever I'm talking with people and we're talking about risk, you got to be real firm on this, and this all goes back to your goals as well. How much money are you willing to lose, and it will not hurt you? It will not set you back. It will not turn your house upside down. That's the amount of money that you should you should be putting at risk. Don't be betting the house if the house will sink your ship. Okay, that's when people get into trouble. That's when people, lots of things start happening when people do things like that. Because then it just turns to gambling. It's like going to the casino, throwing it all on number six on a roulette table. You know, So investing, can you do that? Yes, but like I said, how much money are you willing to risk where it won't hurt you? It won't set you back. If that's $5, $10, $20, 100, 500, 5,000, 500,000, 20,000, whatever that number is to you, you need to figure that out before you get involved in investing. And that's going to save you a lot of time because what happens is a lot of people don't just talk about this thing risk. They put money, some money into their accounts, and they're watching the stock market and all this news, and the price is going up and down. They're about to have a heart attack because they skipped over the risk. They didn't know how much money they were willing to put at risk. Do not, I repeat, do not put any any money into the market until you determine what your risk factor is. Once you know your risk factor, then it's time to go ahead and move on. Maybe start buying you some investments. So again, how much money are you willing to put at risk for a return? Mystery of the stock market solved. Now, I wanted to include this in the book and also in the webinar here for a few reasons. One, as you guys mentioned in my story back in 2011, I stumbled into the stock market. I was reading a book from the the school library, Fresno City College Library. I was reading a book about, I forget the gentleman's name right now, oh my gosh, but he basically was a kid. His dad gave him some money, and he got into the market, and things started happening for him. Anyway, what brings me to that is this: did you guys know that the stock market is a zero-sum game? What that means is, for you to win, someone else has to lose. So Just think about that for a second. So if your portfolio, if your portfolio or your stock that you have, whatever it is that you have, is earning money, someone else is losing money. It's a zero sum game. And so with that being said, I gotta ask you: are you smarter than the professionals that like I was talking about, who's using these intermediate, advanced trading strategies? These huge institutions that's running these pension funds and 401k accounts, these fund managers. Think of it like that. Think of you, the beginner, the rookie, coming off the bench, the rookie, fresh out of college. You know, you're coming in, you're gonna playing some veterans who've been doing it for 20, 30 years plus, with millions and billions of dollars at their disposal. Think about that. Would it be smart for you to go against them, David versus Goliath? What would you do? Remember, it's a zero sum game. In order for you to win, they have to lose, vice versa. And what are paper profits? Do you guys understand what paper profits is? So you ever see anyone? I know I'm pretty sure you guys probably have some friends, some family members, some coworkers, someone who's bragging about how much money they made in the stock market because Tesla or Walmart or McDonald's, Apple, whoever it is, made money that day, so their portfolio showed them a positive 20, 30, $40, $100, whatever it may be. That's what you call paper profits. That's not a realized return until they actually sell that stock and get that profit. Otherwise, it's just on the books. It's just paper profits. Please understand this. That money is not earned until you sell that stock or that security, whatever it is that you have. Until you actually sell that security, that's when you realize that profit, and that's also when you get something what they call a capital gain. Um, then included here on the slide here, because I didn't want to go into too much detail for you guys, but that's when you have the capital gain. That's also when you get some more tax, because now you just realized a profit when you sold that security. Don't want to get too carried away. So, paper profits, investing for cash flow. Hmm. What does that mean? Do you guys understand cash flow? Investing for cash flow. The mystery of the stock market solved. And then we have investing for cash flow. Stay tuned, guys. All right. So whenever you're investing in any type of security, more importantly, stocks and bonds, funds, mutual funds, uh, there's two different type of analysis that you can use to evaluate your securities. The first one, most common probably one, is going to be fundamental analysis. That's when you're taking a look at the company's financial statements, their balance sheets, income statement, cash flow statement, profit loss statement. You're looking at the management, who's the CEO, et cetera, et cetera. Then you have the on the other side of that coin, you have technical analysis. This is probably more for the visual people. This is when you're looking at the graphs, you're studying these patterns, and that's basically how you make your investment decision is basically recognizing patterns and predicting from what happened in the past that may repeat in the future based on a pattern that you recognize in the price of the stock or bond or security. Um, Me personally, I recommend when you're new, you probably want to start off with fundamental analysis, as it is a little more accurate because you're actually looking at the lifeblood of the company. However, I still think technical analysis does apply for those of you who are maybe more visual and you need to see things out. Technical analysis does a great job at that. You can really see the price movements. Um, most brokerage firms now have a lot of these tools built into it for you. So you don't have to be have a financial degree. You don't have to be an AK, for a lack of a better term. You need to just know how to utilize or use a mouse and a standard keyboard. and you can see all these things. And if you want to go a step further, um, some of these programs actually have where it recognizes these different technical analysis, different patterns for you. So you don't even need to learn how to recognize the patterns. The computer will do it for you. So again, you do not need to have a financial degree to get started with investing. But anyway, my recommendation is a little bit of both. Once you start doing both, one of the two probably stick with you a little bit more. Definitely lean more towards that when you look into screening your securities. But starting out, please just give them both a shot. Take a look at it, see what you like, what you do like, and most likely you're gonna lean more towards one than the other. Me, I lean a little bit more towards the technical analysis. The fundamental analysis tends to get a little stale for me at times, looking over all the, like I said, the financial statements, and it gets a little time consuming as well versus a graph. I can pull up a graph, take a look at it, and, immediately know, yes, I want to buy, yes, I want to sell, whatever the situation may be. Security evaluation, technical analysis, fundamental analysis, screen your stocks and bonds. Next, I wanted to talk to you guys about funds. Um, You typically have three major funds. You have a mutual fund, exchange traded funds, and money market funds. Money market fund is it's kind of just like a bank account. You can use it for automatic deposits. You can get a debit card attached to it. Um, the good thing about the money market account, they actually pay you more money than a typical bank account will pay you. So even if you just have your money sitting there, you do not invest it in anything and just have it in this money market account, they will actually pay you a higher percentage than all the banks that's out there uh, that I know of that if you have a money market account. Now, mutual fund is a little bit different. Mutual fund is basically pulling POOLING, pulling the monies of a bunch of different investors, getting all this money together and going and investing it in, stocks and bonds and other various securities. Now, the exchange traded fund is similar to that of a mutual fund. However, it trades on the stock market like a regular single stock or security. So mutual funds, I think, is a good place for most beginners to start. Few reasons. One of the main reasons, most of them are already diversified. Two, that you can actually invest with money amount and not just share amount. What I mean by that, like typically, like with exchange traded funds, you buy shares only. You're not able to invest just the money amount that you have. For example, let's say if I had $20 and I want to buy this exchange traded fund that's $30. I won't be able to buy it because I don't have the full amount of money. However, now if I wanted to get into the same mutual fund with that $20 and it was $30, I can buy the dollar amount of $20 of that mutual fund. So I can get a partial into that actual mutual fund. So that's why any of you guys that's barely starting out trying to get your feet wet, I suggest you start there with a mutual fund. Don't start trying to go and handpick your own stocks and bonds. Um, if you want to, fine, go ahead. But just my recommendation, you probably want to, like again, start with mutual fund. Get comfortable with that. Most of them are well diversified. Now there is going to be different things like fees, things like that, but it all depends on the that brokerage firm that you work with or you decide to use. Sometimes they have no loads or low loads, which is the fees on those mutual funds, so you can get into them for free and just basically pay your normal fund management fee. Um, so that's the basically three different types of funds. Again, for you guys beginner, which is what this webinar is about, I suggest you start with mutual funds. Maybe build up your mutual fund uh, part of your portfolio up to a decent amount. Then once you do that, then maybe you can start diving into more of the maybe adding in some exchange traded funds and so on and so forth. Money market account, again, that's just kind of like a bank account. So if you already have a bank account, um, you can probably definitely do that. If not, I mean I suggest just moving all your money out of there and just operate out of that money market account. Now it's not going to pay you. You're not going to get super rich for having your money in a money market account. However, you will get more money than just having it in your bank. So anytime you hear things like that, well, think about, well, that's just money you left on the table. You could just had your money sitting in that money market account and made that much more money. So don't let people deter you and tell you like, oh well, you're not gonna get that much money. Well, I'm gonna. Well, hey, that's money. We're here to make money. We're here to earn a profit. We're here to get income, and that's income and that's profit you leaving on the table by sticking with your bank instead of dropping it into a money market fund. Um, so yeah, that, again, that's the basic about the funds. Again, you guys who are beginners, definitely start with the mutual fund. The mutual funds, I mean, they cover Y indexes. They have like industry mutual funds. So if you just want to get into, for example, all the technology, you want to just invest in technology, well, you can go and invest in a technology mutual fund. Maybe you want to get into the medical field. Hey, you can go and invest in a medical field fund. Maybe you want to invest in the entire market. Well, fine. You can go and invest in a mutual fund that invests in the entire market. There's a fund for everyone. So when it comes to investing strategies, what you see upon the screen is just some of the basic investing strategies that you may come across. Again, as I mentioned at the beginning of the webinar, this isn't an in-all webinar, so please do continue to do your own research on different investment strategies that can assist you in reaching your goal. Um, just going through the list there, we do have like dividend investing strategies. So if you're looking to get dividends, get that cash flow, there's definitely some dividend investing strategies you can look into, which is basically just getting into the companies, putting your money in a vehicle that pay the dividends. There's companies that pay quarterly. There's some that pay monthly, semi annually, and annually. So it all depends. Then you have growth investing where you want to get into companies who looks like they're showing promising growth. So that's probably more of a long term type of investment as well as value investing. Then you have REITs, which is real estate investment trusts. It's not as good as investing in real estate physically, I would say, because remember this is paper. We're talking about paper assets when it comes to stocks. So investing in REITs, it's still a good idea. Some of these REITs pay monthly, quarterly, and annually, semi-annually. Uh, Semi-annually dividends is a good way to get introduced to real estate. So if that's something in the back of your head, you're thinking about maybe getting into some real estate, this is a little more hands-off type of approach. Depends on which REITs you get into. They have some that invest in commercial real estate, some in residential. So definitely something to look into. And then of course we have something called options. Won't go through too much information about options. That's for another video. That's a little bit different. But just for kids, option is basically just give you the right to buy or sell a particular security at a certain date, depending on what option that you buy. It's basically a way to I would say multiply your earnings or what's the word I'm looking for? I just use multiply, but leverage. There we go. It's a good way to leverage your investing. Beginners, I don't recommend you maybe get into options just yet. Probably want to just stick, like I said, start with those mutual funds, get your account built up, and then maybe later down the road look into options. Because again, it's leverage. So leverage, if you right, it's awesome. It's great. You made a lot of money, but if you're wrong, can you be able to absorb that hit the other way? And again, that's why we discuss risk. How much money are you willing to risk where you won't sink your ship? So those are some of the basic investment strategies. In the book, I covered a few strategies in the book. So if you haven't gotten the book is available. The physical book is available on Amazon. Just type in Princeton Mayberry. Book should pop up, The World's Best Part-Time Job. Or you can go to the website, beginnerinvestinguniversity.com, where I have the ebook available. Also, you get some bonus material if you do decide to get the ebook. So whichever way is awesome. Same material, same strategies. Um, Definitely look into it if you haven't gotten it already. portfolio allocation. So what is that? Um, in layman terms, portfolio allocation is just a mix of securities that you have in your account. It's really that simple. If going back to some of what I previously said about mutual funds and diversification, that's why when you're a beginner, I suggest or I recommend you start with mutual funds because of that top bullet there, diversification. You're immediately diversified versus you being a beginner having to pick 20 different stocks or 20 different bonds or 10 bonds and 10 stocks, 5 bonds, 15 stocks, whatever your ratio may be. So portfolio allocation, that's basically what that is. It's your balance. It's your diversification. What does your portfolio or your collection, whatever word you want to use, collection, portfolio, holdings, what does your holdings look like? And what it looks like should directly, excuse me, go in line with your goal. And your goal should go in line with your strategy. So if something is off there, you may need to go back to stage one or step one, which is that goal. But portfolio allocation, again, is basically what securities do you have? What percentage of stocks or bonds do you have? And all of that, again, goes back to your goal, goes back to your risk factors. Okay, so now, if you haven't already, you should be getting your brokerage account up and running. I mean, it takes minutes online nowadays, even quicker with apps that now that we have these investment apps. Just things to touch on. Just be sure to choose a brokerage account that aligns with your goals. I know you guys probably heard me say this about 1,000 times already tonight, but please make sure it aligns with your goal, which means please have your goal set up prior to downloading and getting into the investments. Take your time. There's no rush. I mean, feel free to call around. These people love to talk to brand new investors that they can really educate you on what services that they have available for you. There's a lot of free material that a lot of them do have. So please take your time, do your research, call around, and make sure they offer what you need and what you want. Because some of you guys, you may be doing everything on a mobile app. So what if the company doesn't even have a mobile app these days? And there is some out there. Be warned. What if you want to have margin? Basically, what if you want to borrow money from within your brokerage account to buy or short sell stocks and bonds? And short selling things like that, guys, that's more of the your intermediate to advanced. But yeah, but in the future, who knows? You might be someone who wants to borrow against on your account, which is margin. Do their brokers have that? What are the guidelines for that? I mentioned options earlier. That's a intermediate investment strategy. What are the tiers? How do I get the options trading added to my account? So it's that time, guys. Go ahead. Let's pull the trigger on this. Let's stop, thinking about it, worrying about it. Get your account opened. Uh, Start with your goal. Get your account open, and let's get started investing, guys. And I really wanted to show you guys how easy it is to get your account set up. So I included just some step by steps. I'll open up a Fidelity account. Now, I'm not endorsing Fidelity. I'm not an affiliate of Fidelity, anything like that. So please, again, like I said at the beginning, always do your own research. Fidelity just happened to be the one account I was opening up when I was getting this webinar together for you guys. So that's why I put it in there. If you click the little PDF icon, you can download the PDF and it shows you step by step of setting up your Fidelity investment account. And the last topic I wanted to discuss with you all today is the very, very popular employer sponsored investment accounts, also known as a 401k. Um, wow. I mean, I can talk about this for hours, but again, I'm trying to make this webinar real quick for you guys because I want you guys to spend all your time researching. I want you to start investing. So anyway, just know if you have a 401k, guys, please know what your money is invested in. As I said previously, we COVID-19 just hit last year, and if you were invested in a 401k, you saw, if you when you got your quarterly statement, did you not see how much money you lost from your account? And realize how long it's going to take you to recuperate what you lost and then actually be back on the positive side of gaining. Understand this, these people. Understand your taxes. What are your taxes on this? What are the penalties and fees? They do allow you to borrow against your own money, but however, they do charge you a fee for withdrawing the money, and they charge you a fee if you decide to pay that money back with payments. Is that something that you want to do? Do you want to borrow from yourself and pay somebody else from borrowing your money and also pay them a fee for taking out your money earlier than you anticipated? These are things you need to consider. Understand those fees. Understand the contribution matches. Some of the employers, they match up to a certain percent. Is that worth it? Now, spoke with a lot of people. A lot of people told me, well, hey, Princeton, whenever I invest in my 401k, it lowers my taxable income. I said, that's true, but did you know there's better, more effective ways to lower your taxable income than putting your money away that you can't touch till you're 65? And if you do touch it before that, you're going to get a fee and you're going to pay taxes on it. Well, Princeton, I get to invest this money tax free. That is correct. But what happens when you withdraw the money? Yeah, you pay the current tax. So, yes, your money is going to get built up faster because it is being tax free. But guess what? When you do decide to get that money and cash that money out, you will be taxed. Now, am I saying don't invest in employer sponsored investment accounts? No, that's not what I'm saying. What I'm telling you is to understand. Know what your money is invested in. Understand taxes, understand fees, understand its contributions, understand you can't touch this money until your retirement age. Is there other vehicles I can put my money in for retirement than a 401k? Okay, people, let's bring it all together. I took up enough of you guys' time. Just want to do a quick recap here. I know you guys, I want you to get started. So, again, get your goal together. Once you have that goal together, pick your strategy that's going to align with that goal. Once you have that strategy in place, please do not veer from the strategy. That's the purpose of the strategy. That strategy will get you to your ultimate goal. Please, please do me a favor. After you do this, if you haven't already, open up your account and go buy you some stock or bond or mutual fund. Just do it. Stop sitting there nervous. Stop trying to know everything there is. You can't know everything there is about the stock market. And if you try to do that before you invest, you will never invest and you will miss the wave. You will miss out. You cannot know everything before you get started in investing in the stock market. Reread the material. If you guys don't have the book, I know I went through this stuff quite a quick today. If you don't have the book, please take the time. Invest in yourself by getting the book. It is an investment. Invest in yourself on Amazon. Type in Princeton Mayberry. The book will pop up. The world's best part-time job. Get it, read it, reread it, reread it, reread it. Again, website www.beginnerinvestinguniversity.com. I have the ebook available with a few bonuses for you guys who's new to investing. You need to just indulge yourself in this material. Now I know a lot of people, you have jobs. You're not a full-time investor, nor am I. I'm not a full-time investor. I'm a part-time investor. I understand that you have things going on. I understand you got things to do. But guess what? Never stop learning. Never stop learning. Get the material, read the material, get your account open, start investing. Stop being scared. Stop trying to learn everything there is about it before you get started. Because if you do that, you will never get started. And study those who are successful, but study them at the right time too as well. Because I know a lot of people like to refer to Warren Buffett, and they want to do what Warren Buffett does. Well, when Warren Buffett was a beginner, trust me, he wasn't doing what he's doing right now. So if you're trying to mimic what he's doing right now, it might not be the same result for you. You need to copy or mimic them at the correct time when they were doing certain things. I think that's what happens to a lot of people as well, as beginners. I'm speaking of as well. You try to go out and mimic these people you see on TV and these books and who get, name and lights, and it's not the same. It's not the same. Because I don't know about you. I mean, are you able to go buy out a company right now through investing? That's what some of these investment giants do. These institutions I was speaking of earlier. Remember, it's a zero sum game, guys and gals. It's a zero sum game. But never stop learning. Read the material. Reread the material. Look at other people. See what other people are doing. Nothing new under the sun. Okay, guys, and that's it. I appreciate you taking the time out today to go through this webinar. Just want to invite you guys again. Definitely go to the website, www.beginnerinvestinguniversity.com. We have various training material there for you guys. I have other investing information, like I said, where we're going to go over different investing strategies. I have personal finance information for those of you who may need to get your finances in order first prior to investing, and even for you guys who into business. We actually have business programs on there for you as well. So beginner investing is it's more about than just investing in the stock market. It's about investing in you. And I believe through those three channels, anyone can be the best person that they want and can be. So again, website there at www.beginnerinvestinguniversity.com. Follow me on all the social channels at Beginner Investing University, and I hope to see you guys at the next webinar.